Let's kick off with JD Group out with results today, having just spoken to Janine van Sale from Old Mutual. That stock closing at 42 Rand 70, up over 4% on the day. Are you looking through the cycle where JD Group is concerned? From June last year, where we saw the stock bottom, it is up 88% to this point.
Evening, Bronwyn. JD was one of those that were particularly hard hit. Anglo springs to mind, but the market had a rough 2008. Some stocks had a rougher time. JD was one of them. Bad debts with the worries, some restructuring and the like. But when the results came out, we're talking the last year results, they really did write things down. So they were looking for that turnaround. They had some structural costs this year, some SARS issues and the like. But if we ignore that and we look down to what the numbers were, in short, very, very good numbers, strong looking business. Bad debts on the rise, but certainly the view from the business is that the bad debts seem to have bottomed. They're looking at new stores going into next year. I think the share price tells the story, not only that rally off the low, but even just the rally today. On the surface, the number's not great, but that drilling down really shows a picture of a company that's very well positioned for when the consumer returns.
Obviously, you've done very well if you bought JD Group in June of last year when we saw that bottom, and it's rallied, as I said, 88%. In your view, is there more upside to be had? Would you buy it today, and how long would you hold it for?
I think yes. I mean, make no mistake, the easy money has been made, and that's pretty much across the entire market, except small caps, Altex. They're still on the lagger, even some of them heading down. But in the mid caps, large caps, easy money has been made. Stocks like JD, if you're looking for quick money, I'm not convinced it's the right place. But if you're looking for a stock that when the consumer comes back, and that's looking 2010, and it might be sort of second or third quarter only, when the consumer starts spending again, when they get their credit under control, and I'm talking consumer credit, not at the JD level, they're going to start doing well. At 40 Rand, this is a stock that's been north of 100. Now, north of 100 was overpriced, but even at current levels, 44 odd Rand underpriced. So, short answer to the question, if you've got time on your side, 6-12 months, JD is still a buy.
Lonmin out with results today. That company closing up 7 2/3% at 213 Rand 85. Again, the market looking through the cycle. Ian Farmer, the CEO of Lonmin, saying that they are looking to increase platinum production to 850,000 ounces. That's additional 1/5 in terms of production, given the fact that they see supply side constraints coming to the fore and boosting that platinum price. Would this be one to put into your portfolio?
Look, in the platinums, I've always preferred the big two, which is Implats and Anglo Plat. Lonmin, I suppose, is your little more high risk, and if it works out, high reward. The boost in production is a really, really big ask. They've got to put a lot of effort into that. Not saying they can't get it right. If they do get it right, the reward is going to be there. But there are always risks in these big projects. Particularly, they're talking, as you said, a 1/5 increase up to 850,000. That is significant. And the prediction that 2010 is going to be normal. 2011. They're starting to talk about tight supply in platinum, and that might be a little bit early. I've seen other people saying it. Certainly, he's not alone in that. I just think that might be a little bit early, and so that coupled with the potential risks of expansion adds some risks to Lonmin.
And I see the graph we put up there, some discrepancy on the closing price. I'm sitting with 213 Rand 85. We are correct on the percentage side, up 7 2/3%. But we are saying that the close was at 209 Rand 22 on that graph. We hopefully will rectify that information for you. Simon, let's go back to, or come to Barloworld, also out with results today. And again, the company or the market relatively relieved that we're not seeing any surprises on the downside. Certainly, it looks as though the worst may be over in the motor vehicle environment.
Absolutely, and I mean, you've made the comment in the previous two, looking through the numbers, and it's the same with Barloworld. I mean, what are we looking for? We're looking for no surprises, nothing that we weren't anticipating that hasn't been forewarned to the market. We're looking for companies that have come through, keeping their balance sheets well intact, if possible, strengthen the balance sheet. Tough in this environment, but not impossible. Debt not out of control. We're looking for, in terms of creditors and debitors, under control. And certainly, Barloworld weren't great numbers, but if we say, well, okay, they've come through what must be one of the toughest times for businesses, if not the toughest. They've come through very solidly, and when things start to pick up, and we're not talking a sudden and accelerated pickup in consumer demand, but when it starts to happen, it'll be slow and gentle. The companies who've come through lean and mean are going to be well positioned, and Barloworld, JD, certainly two of them that I think are well positioned.